I will show you the best engulfing pattern entry strategy on this video. I will go into details exposing every hidden approach behind the engulfing pattern setup so that you can maximize profits from each trade you take. Let's get started. Let me show you the big problem that a lot of traders are making when trading engulfing candlestick pattern. What you are looking at is a bearish engulfing candlestick setup entry. As you can see, the entry was here and the stop loss was right above both of the candle tails. As you can see, this stop loss is very large, very big, and you end up having a smaller take profit area, which is very hard to be profitable if you trade this way. You end up trying to force 1:2 on a 1:1 trade, which becomes problematic now to be consistent in your trading. Let me show you the correct way of doing this. So in a daily time frame, as you can see, as always, we have a good uptrend. And alongside the uptrend, we spot a bullish engulfing candle. So let's go into the smaller time frame to unlock the details hidden behind this bullish engulfing candle so that we know where to place the stop loss. So if you go to a smaller time frame, as you can see, we are in a 1 hour time frame in this case. And you can see that this is the bearish candle of the bullish engulfing candle, the candle that is engulfed inside the bullish engulfing candle. And here we see the bullish engulfing candle itself. And of course, we know the entry is gonna be right here at the close of the bullish engulfing candle. And that is always the case when you trade the bullish or bearish engulfing candle. And our goal is to find a place along this bullish engulfing candle where we're gonna place our stop loss so that we can maximize the profits of our trades. So in order to achieve this, we need a very important indicator that will help us identify this area where we're gonna place our trades in a maximized way. And the indicator I'm referring to is the volume indicator, as you can see it placed here. So the volume indicator tells us the areas that had a lot of buyers activities alongside this bullish engulfing candle. So those areas is where the market will stop when the market retraces in our bullish engulfing candle. So this is what we are trying to identify by using the volume indicator. So here's what volume indicator means. So each candle that you see is corresponding to each volume bar. So the higher the volume bar, the more the activities happen in that candle. So it becomes a very interesting candle in terms of the information that we need. So as you can see here, the volume on this candle was very high and followed by this volume. And as you can see, other volumes also were also high. So this becomes the areas that we are interested in putting our stop loss in, because this is where the market had more activities and this is where the market will bounce when the trend comes down. So the aim is to put the stop loss below those areas that we have found using our volume indicator. So for this one, we put our stop loss right below this candle where the activities were happening. And for this one, we put it right below this particular candle, and also on this one and that one. So next, I will show you how to decide which place to put your stop loss at. So as you can see, I placed the trade indicator here and I put the stop loss on the second line of our areas of activities. The reason for that is that the first area becomes a line of defense. So the market will come down and bounce in this line of defense. And if it fails, it will go to the second line. Also, the reason why we know that it will bounce here is because the volume tells us that there were higher activities in that area. So there were high activities in this particular candle. So because of that, some of the trades were not all filled when the market was going up. So when the price comes down, those trades will be filled. They will push the market up again. So that is the reason of putting the stop loss in the second line. And because of that, because our stop loss is much tighter, which is placed in a calculated way, now our profit margins becomes a lot better. So you make money going forward if you trade this way. So basically this becomes our line of defense. So as you can see, the trade played out very well and it came exactly to where our line is. And the market pushed it up again and it ended up being a successful trade. So our lines of defense are very important when you want to trade the bullish or bearish engulfing candles, because this is where your stop loss is going to be tied. So now you can see how you leave the money on the table when you're trading like this. Your stop loss becomes very big and you end up taking 1:1 trades, which is not good for your trading success. I also expose the power behind the engulfing pattern on this video. Check it out.